Hey everybody, we're back.
Hey Arthur, I'm doing this leather thing. What do you think?
I think it looks pretty good.
I've got brown and I'm kind of trying to find my inner Jensen Huang, who's the CEO of NVIDIA. I get it though. It's comfortable, kind of dressy, but also not dressy. And
Kind
I
of
only
get to hang
got
with the cool kids.
I only did half my manicure. So if I'm looking down while you're talking, it's because I'm finishing my manicure. Okay, I'm going to start, and then we're going to let you take it away. But my question, just to myself, really, because that's all I have up here in Tahoe, is this stock market rally justified? And I just want to remind people that stocks generally do go up when the economy is growing, and recessions, of course, are another story. And you can argue with me, but I think we agree on this particular topic. We do not see a recession on the horizon. And remember the following: we have never seen a US recession with corporate profit growth staying positive year over year. We are already seeing pretty strong growth coming in this earnings season, which reflects what happened in the second quarter. So that one is a check the box, no recession. And then we've never seen a US recession without the unemployment rate rising. We've had a modest increase, but generally speaking, employment, I think we agree on this too. Employment has been pretty solid.
Yeah.
And then recessionary weakness in the US labor market has never occurred in a vacuum. It's always been confirmed by weakness in business fixed investment. And what we heard today from Google and earnings, which we're going to talk about later, is that they're increasing their CapEx budget. And if you look at the Obama bill, we're definitely going to see increases in business investment. So I think we are due for a pullback. We get one every 12 months. It's a 10% correction, 5 to 10. So if we get that, don't lose heart. We will be using it at Laffer Tengler to add to high quality company holdings. And as I always say, volatility is the friend of the long-term investor. So take it away.
As I said, you and I have talked a lot about interest rates and the Fed, and there's been a lot of discussion about the Fed, not just rates, but personnel and all sorts of fun issues. But, in spite of where rates are on the short end, to your point, we're seeing a pretty good, very highly functioning economy that just seems to be plugging along, and risk assets are doing pretty darn well. I mean, across the board.
Yeah. So tell us about the world.
Yeah, we've got some new developments in trade, and I want to talk really quickly about an election that just happened over the weekend as well, and what might be the outcome of that going forward.
So let's go around the world.
Around the world with Arthur. Launching you
Alice to the moon.
To the moon. It's sad, I was with two people at my club, and one of them was a very young junior wholesaler, first time on the road, and he didn't know who John Wayne was, and I almost died. So we've had a couple more trade deals that have kind of closed, and I think what's really important to understand is there's the White House sent out letters to several hundred countries about negotiating tariff and new trade deals and free trade deals and the minimum 10% plus. But really, the crux of global trade as it relates to us are a couple of really large trading partners. The top 5 or so is going to be EU trading bloc, which is a unique issue, Canada, Mexico, China. And so there's a couple of big ones that really, really matter to us, at least in the short run. And then there's stuff that matters more in the long run, like developing broader trade negotiations and trade avenues for U.S. manufacturing, since that's what this White House has said that they really want to bring back. They want to bring back manufacturing to the U.S., reinvest in the U.S., create U.S. jobs, become like an old line manufacturing powerhouse, right? So the 3 new ones that have just shown up on this list, and I've got them in the winning category. I guess I wasn't licensed to do the winning, meme, but we picked up Japan, Indonesia, and the Philippines. And Japan is obviously the biggest of the three, but looking forward, Indonesia, huge population, and fast growing country. So that was a win. Japan, we cut a really good deal. We were going to put 25% on their autos. We negotiated that down, I think, to 15. Maybe we can show the next slide. That kind of outlines the deal for Japan. And I can't read that. There you go. Okay. We got tariff reductions on autos, which is what they wanted. That's their largest export to the U.S. is auto and auto parts related items. We were threatening 25. It's down to 15. We've got this $550 billion. Nancy, what I can tell, it's an investment fund.
Yeah.
So it's not direct investment. It's like kind of like a fund that's going to make direct investments in the U.S. And for some weird reason, we're going to get 90% of the profits. I'm not quite sure what that means. I think the devil's in the details on that.
Well, all you need to know is this Howard Lutnick's idea. So
okay.
That would be great. He said it this morning.
Details.
It was my idea.
But more importantly, we negotiated better market access to the Japanese markets. They've been probably one of our biggest trading partners that has really restricted access. U.S. autos, ag products, you name it. I mean, they've been very restrictive, both direct and indirect tariff and trade barriers. The other one is a big part of their defense spending. We've got the Europeans really ramping up defense spending. Japan is, Australia. You see, everybody is. That's a global thing. So we've got this big deal on defense spending. They're going to buy a lot of Boeing planes and all sorts of stuff. And they already do a lot of that as it is, but this is just solidifying it. Good deal for the U.S. Very optimistic. And also now we've got one of the major deals behind us. Indonesia, same thing. Good deal. Opens up their market. I think it's 99% of all traded goods we have with them. It drops the tariffs to 0. And we still impose a 15% tariff on them. And not only that, but you're seeing a lot of these deals have clauses that say if they act as a pass-through for Chinese goods to get around our Chinese tariffs, they get hit with penalties. So we're putting that in all these deals.
Can I ask you a quick question back on Japan?
Yeah.
So you had rice going up 75%. I thought we sold no rice to Japan. I mean, is it law of small numbers or is that actually meaningful?
So we sell rice Japan, but they've got quotas. So it's all these direct and indirect. So we do sell rice. We can easily underprice them all day long. But they basically, they have a 0 tariff, like up to a certain volume of rice. And then it goes up to like 245%, like overnight.
Okay.
So it's just kind of
progress.
Yeah. It's like autos. We did, we have FDA access in Indonesia now, or FDA rules, US EPA and all sorts of other rules on auto safety. Indonesia's agreed to not stop our cars from coming in for silly stuff like that. So these three are all really good deals. The Philippine ones, I will say, I think the most important part of it, because it's not a big trading partner and probably doesn't have the capacity to be, is the military aspect of it, military cooperation. And trust me, I think the Philippines wants that more than anything, since we pulled most of I think all of our bases out of the Philippines.
Good.
So they've had a lot of issues with China, those barrier reefs that were put up. They build islands. So I think that's good for Philippines. It's good part of defense contract.
Good.
So those three are great. And if you go back to the list of look what's still outstanding, the big one is going to be the EU. And rumors are now that because we got the Japan deal done and we gave them a break on autos, which is their big export, Germany obviously is one of the big main members of the EU trade negotiations. Autos is also their hot button. So hopefully this is going to be a precursor to getting an EU deal done sooner than later. And what that leaves open, this chart's interesting. The EU is the first chart with the orange bars, and then Canada is the one with the red. And this shows the imbalance. EU, basically, we're both making about 20% of total exports, the EU to us and us to them, but they have almost twice as much, 50% more exports in dollar terms to the US than we do to them. So they're going to pay a bigger price, Nancy.
Yeah, that's good. And that brings up the question of whether or not you want to be long rest of world or really focused on US still, even despite the valuation differences, because they've got a higher regulatory burden, and now they're going to have a higher tariff burden. So stay tuned.
We're deregulating, and they're very highly regulated.
Right.
And then they've got this debt trap. Nancy, the Germans really don't have. It's almost like an off budget for military spending. They're not counting it in their budget, which is very interesting. But Canada, we're 75% or so of Canada's total trade. So those numbers are very misleading. You look at the number, the amount of trade with Canada and the US is pretty even in dollar terms, but that's only 17, 18% of our total exports. It's 75% of their exports. So the interesting thing about Canada is that deal hasn't been moving really at all. And Carney's been very resistant to a deal. And I'm telling you, like, he is not in the catbird seat. He's going to have a real problem if he doesn't cut
it. Yeah. Well, I think this is good. I mean, this is why the stock market rallied today. I think this is all very good news for U.S. stocks and U.S. corporations. You said something earlier about making. I'm going to buy. We got a comment. I'm going to buy in September and October, baby. Okay. Keep buying. No, I actually think, I've drawn, I was going to talk about this later, but maybe I can jump in and just talk about our analogy to the 1990s.
Yeah.
Because I think it's important to this whole conversation, and then we'll come back to what you were talking about. But I wrote my first piece about the analogy to the 1990s. I'm reading from my notes because I don't remember, on February 23rd, 2021. And I followed up with a number of commentaries to shine a light. And then we got really serious about it in 2022, I think, 2023. No, fall of 2022. And I wrote a number of pieces on it then. And I think the important thing to remember is, even though you and I disagree, and we'll talk about this later, on whether the Fed should or needs to cut, what we know from the 90s is that the Fed funds rate was above 5%. The 10-year was between 7 and 8% during the decade, and inflation was around 3%. So you had robust stock price performance coexisting with these other factors, and it's why? Because of productivity. And I think we're in the same environment. And I take an attagirl on this one, because a major strategist just came out and wrote a piece with the same title. I mean, I'm not saying it was plagiarized because I don't own this title, but I wrote a piece called 1990s Redux, and that was in March of 2024. It was part of this continuing series of commentaries on the analogies, and speeches, by the way, on the analogies to the 90s. And I just saw a strategist that published a piece with that same title. This, folks, is what makes a market. You want to be early, and then you wait for others to join, and that drives the next leg of performance. And so I think, we have some tech earnings today we'll talk about, but party's not over, and I think you want to be part of it. So sorry, I took you off track a little bit, but
no, it's perfect. It argues that, like, look at the fundamentals, don't watch headlines. This is one of the things I think we talk about with clients all the time. The news cycle is so oriented around activity, and you can get distracted by all the details of what's going on, like, housing starts or retail sales. And they talk about, well, it's up, 0.3 versus expectations of 0.2 and 0.4. I mean,
and then next month it gets revised down or up by a huge factor. So yeah, it's good not to make decisions on that. But tell us about the elections, Arthur, because I think this is super interesting.
Yeah. So, looking at global politics, we had an election in Japan this past weekend, and the ruling LDP, the Liberal Democratic Party in Japan, had already lost majority of the lower house. They have an upper house and a lower house, like we have a Senate and Congress, right? And we have the House of Representatives and the Senate. So they have similar setup, although they're parliamentary. And they just lost control of the upper house. Now, not huge. It wasn't a blowout, but I think it's setting the stage for this revolving door of basically lack of leadership in Japan, which makes policy prescriptions very difficult to implement. If you look at this chart, this is the last 20, the last 20 prime ministers of Japan, and they've had 20 prime ministers in 25 years. And the ironic thing is that Abe was in for 7 years, and his last one, he was in for 1 year. The first time he got knocked out, he went from being literally the largest loser in post-modern, post-World War II Japan. He got wiped out, and then he came back 5 prime ministers later and won in the largest landslide ever in Japan, post-World War II Japan history. He was in office for 7 years and finally left, and then he was assassinated, which is horrible. But you just look at this. I mean, the white boxes are basically prime ministers that have served 3 years or longer, approximately. Every other person is,
Nuts.
it's some of them not even 2 months. Some of them were like 63 days.
I mean,
And
that's third world country stuff.
imagine thinking about how do you rule when, I mean, imagine the US if we had presidents coming in and out of office in 2 months or 12 months all the time. You couldn't get anything accomplished.
Yeah.
And I think that's what we're looking at. We're going to find a kind of rudderless Japan as they try to scramble around and build a political consensus. So I'm
Do you
not
think that changes? I mean, do you think that puts the deal at risk at all, or the trade deal, or no?
It might. So if part of the reasons around him or his party losing the majority, even with his coalition partners in the upper house and the lower house before that, if that's really around the issues of confidence in the administration to pass good policies, and part of that's trade, then yeah, I think you're going to see the reaction should be a negative response to the trade deal. I don't know that that's really as much. Japan's finally got what it's been quote unquote asking for. They've been asking for inflation. They
Yeah.
inflated their balance sheet at the Bank of Japan much more as on a GDP, a relative GDP basis than the US did. So they actually did more stimulus than we did in relative terms. They've got the inflation now. Congratulations. The pain of stopping it's going to be serious.
Yeah.
And I think that's probably much more the issue. It's the economy is not doing well.
Yeah.
Yeah.
Okay. That's super interesting. All right. Can we talk about I Told You So?
I think I told you so would be great.
It's Atta Girl Wednesday is what it is. So I think we have a chart that shows what I'm about to talk about, but it's another important principle for individual investors, which is why I'm bringing it up. So I was on CNBC the day that the news broke about DeepSeek, and all of the tech stocks, and especially NVIDIA, got clobbered. And remember, this was China telling us they built this super fancy inferencing AI product with, I think it was $6 million. Oh, and by the way, thousands of NVIDIA chips that they forgot to account for. But I didn't believe it at the time. I happened to be on with Dan Ives, but for a very short period of the time, and then we kept coming back to the topic. But both of us agreed that you should, in that environment, you should have been adding to technology and all the ancillary, the data centers were getting killed. The data center infrastructure names got killed that day. And we talked about Jevons paradox. And Jevons paradox is a counterintuitive, well, that's why it's a paradox. Technological innovation often leads to an increase in the consumption of that technology. And so think back to the first fax machine. It wasn't worth much because there was no one to communicate with. But then as the network grew, it became the prices actually went down, and it became much more omnipresent. And so that was my position and ours as a firm. And so we added to a bunch of those names in the first quarter, and I've talked about it repeatedly. But look at the chart. The chart shows the performance of NVIDIA from the DeepSeek announcement. And it's compared to the performance of the S&P 500 equally weighted over the last 2 years. So in a period of 4 months in NVIDIA, call it 5 months now, 5.5, the stock is up 19.7%. And over the last 2 years, the total return for the S&P equal weighted is 18.8%. So, yeah, so it's just interesting. I think it's a good lesson on when you have the opportunity to own a great company at a cheaper price, that's when you should be buying it. I was talking to one of our clients today, and he said, I'm an excellent investor. When the market's up 2 days in a row, I start buying, and when it goes down 2 days in a row, I start selling. Of course, that's exactly the opposite of what you want to do. Oh, look at me and Jensen. I like mine better, but that's pretty cool. So I told you so, and I'm gonna remind myself of some of these things because I forget what I said 5 minutes later. So can we talk about our friend Jay Powell?
I think we should.
Okay, well, I had a title for this segment called "Get in Line, President Trump." So I write, as you do, a lot, and then I immediately forget what I've written, and I never go back and look at it. And so I asked the team to send me just pieces that I've written on the Fed. And my first critical piece was written on June 30th, 2021. And I say in that piece, and I'm going to go through this very quickly, but I say in that piece, I am naturally suspicious of the Fed who believes they can control the burn of inflation. Muscle memory tells me otherwise. A controlled burn, as any firefighter knows, can quickly become a wildfire. Rising inflation and slow growth, courtesy of the 1970s, can only be one policy mistake away. So the point was, this was when he was saying, it's transitory, we're going to wait, because remember, he was waiting to get reappointed by President Biden. And then I followed that up with a piece called Mr. Magoo's Washington, where I talked through a lot of the issues. I don't happen to have that one handy.
That's
lucky for all of us. But then I went, that was the month later. And then right after that, or a number of months after that, February 18th of 2022, I wrote a piece called Inside the Beltway Might As Well Be Outer Space. I referenced Mr. Magoo's, but it's interesting because a lot of this stuff I think we've both forgotten. So we outlined the Fed's track record on inflation, which was dismal in Mr. Magoo's Washington. And the administration's energy policies were dangerous, I thought. And the profligate spending coming out of Congress, downright diabolical from an inflation standpoint. And that is noteworthy to me because the chairman had nothing to say about excessive fiscal spending, like wartime fiscal spending that we were seeing in 2022 and 2021, actually. And yet they still waited. When did they finally cut? May of 2022. And inflation had already spiked pretty dramatically. And they were, I wrote about how they were maniacally focused on the labor market. But during that period, JOLTS numbers declined from over 11 million down to over 10. And then that morning of the piece, when I wrote it, they were reported at 10.7. So there were plenty of jobs per person looking for a job. I think at that time it was 2 to 1. Now it's 1 to 1, which is still a very healthy labor market. I wrote a piece called on November 2nd. So you think the president is maniacal on this stuff? On November 2nd, I wrote How to Make Sense of the Colombo Economy. And I talked a lot about the Fed, and I kept saying, and one more thing, and one more thing. But then on November 3rd, I wrote a piece called The Savant Idiot, Forgive Me, at the Federal Reserve. And that I did not create that phrase. It was created by Joseph Epstein, whom I love, and is all about words. But a savant idiot is somebody who is learned, brainy, brilliant even, but gets everything important wrong. And then I wrote, enter the chairman of the Federal Reserve. So he was still making mistakes at that point. First quarter, I wrote a piece called The Rudderless Ship Adrift. And there was an opinion page, and I think this is really critical. There was a Wall Street Journal opinion page piece entitled, For the First Time, the Fed is Losing Money. And it said, all central banks were designed to make money for the government from its monopoly on issuing currency. The authors of this particular study, or this particular piece, were Paul Kupiec and Alex Pollock. And they went on to say the Fed did generate profits, which it sent to the Treasury every year from 1916 on until last fall. And you're the only person I've ever heard talk about this. This is so important. There is a purpose, and the main purpose is to make money. And we're losing money, and we have been since that piece, which was in the first quarter of 2023. I'm almost done. I then wrote a piece called Mr. Magoo's Washington Redux, and this really stood out to me. this is the history of the mistakes that have been made by this Fed. And I wouldn't have remembered all this if I hadn't written it down. So in June of 2020, just as CPI was accelerating, the chairman remarked that we are, quote, not even thinking about raising rates, end quote. With all due respect, that would have been a great time to start thinking about it. But in fact, the first hike didn't take place until, it was March of 2022. And then it was followed by a 50 basis point increase in May, and then 75 basis points in June. And he, by the way, right before the 75 basis points said, we're not raising 75 basis points. And then 2 weeks later, they raised 75. Shortly after shortly after the chairman assured markets that 75 basis points were off the table. We subsequently heard about the Fed's toolkit to conquer inflation, as inflation apparently impervious to Powell's rhetoric marched relentlessly higher. And I'm almost done, Arthur. But then I went on to talk about how critical it was for him to say the right things. And he kept flip-flopping because the journalists who are covering the Fed, the pundits, they're always repeating his words as though they had veracity. But he's been so incorrect so many times. And then there was a Gallup poll that came out, and I wrote, Americans seem to have had enough. A recent Gallup poll showed that 35% have a great deal or fair amount of confidence in Joe Biden on the economy. Federal Reserve Chairman Powell comes in at 36%. That was March of 2023. And I would venture that it's only gotten worse since then. And then I wrote a piece on June 15th, time to replace the Fed with Chat GPT. Generative AI learns the Fed seems incapable of doing so. And it just goes on and on. You know, I mean, it took 15 months to hit peak CPI on June of 9.1%. And then he started talking about a pause. And Nick Timrose of the Wall Street Journal asked the salient elephant in the room question, if you're going to continue to raise rates, why are you pausing? So there's just been policy mistake after policy mistake, and the American people have paid for it. And to me, that's cause. If you and I did that, our clients would fire us in a heartbeat.
Yeah. You know, what's interesting is that if you kind of assume the more paranoid view of how the world works, especially the political process, you would see politics mixed into all of his decisions. By the way, it's not just the reappointment and holding off on transitory. I really believe that this chairman under Powell believed that he would raise rates really fast. He'd put the kibosh on inflation. Inflation would come down, and then he could cut rates really quick and become a hero, that he averted, catastrophe. And that would also help the administration, then the Biden administration, go into a second term. Like, if we can just get this nipped in the bud very quickly, we can do this and then get out of it. And everybody's safe. I'm a hero. I get reappointed. Everything's hunky dory. And, I think one of the initial things we both worry about, Nancy, and we've talked about this, we don't like political interference in the Fed. These are human beings.
100%.
By definition, they've got bias. They can't avoid it. But overt political maneuvering inside the Fed, especially by the chairman, is really not good.
All the while claiming not. And then everybody says, see, he's not political, but he's independent. I would like to see an independent Fed. I don't think we have one.
I don't think we have one either.
Yeah.
And I know the thing that worries you is also, half of the board are Biden, I think almost exclusively Biden appointees. So the question you get is, even if you get rid of him, will he step off the board? Will he get all the way out? And even if he does, you've got half the voting members, the permanent members that are not appointees of Trump. And so the question is, do you get a hung board?
Yeah, well, and all of the meetings, except one recently with Michelle Bowman dissenting, have been unanimous. And so I also wrote a piece, which I spared you of, that was called, If Everyone's Thinking, and this is General Patton, not me, if everyone's thinking like someone's not thinking. And that to me is really, really unfortunate, because in the days when you and I grew up, there was real dissent on the Federal Reserve Board, and there were strong economic backgrounds. I thought the most interesting thing that happened this last week was not necessarily the president going after Jay Powell or even Scott Bessent, but Larry Lindsay coming out and saying, they have 450 PhDs. They all think alike. They're not adding any value. They're not even using their model. On the board, you don't have anybody with a strong economic background, or he even specifically said you should have a businessman or woman on the board. He said man. But yeah, so I think there are, I do think that the Secretary of the Treasury is right to do an investigation into the entire institution because it's lost its way. And if you add, the policy mistakes to the fact that we're losing money at the Fed, that continues all the while we're still funding the CFPB, which is at the discretion of the Fed. Has no budget, so we're still funding that, and then you've got this kind of gross remodeling thing going on, and the average American goes, I'd like to remodel my kitchen. So anyway, I think I've beat that dead horse enough, but yeah, I think I have, so I'll stop. But I agree with you, we want an independent Fed, and it's not just the president's meddling that's a problem, it's the fact that the Fed has not been independent, because presidents have meddled forever. I mean, Lindsay was talking about how President Johnson took whomever was the Fed chairman at the time and threw him up against the wall in the Oval. Because I know Johnson was a big dude. And so he tried to intimidate him that way. You had Reagan with Volcker. Volcker was bigger and scarier. But Reagan tried to, encourage him. So, the meddling is not new. Maybe the daily pounding is, but
what's even scarier is when you look at the Fed's balance sheet being almost $7 trillion in an economy that's doing so well. They shouldn't have anything remotely close to this, because if there is another crisis, they won't. What are they going to do? Expand it to 12? They've lost one of their tools. One of their major tools is kind of buying and selling and pulling liquidity in and out of the system to keep inflation down, because that's one of their key jobs. It's literally inflation. Price stability is their number one job.
Yeah, I think they have two, right? And so maybe that's just been a little too confusing for
employment within relative. It's interest rates, but really it's employment and inflation, because inflation's down. Then by proxy, real yields should be lower if you keep price stability as your number one target. Yeah. But the $7 trillion in the balance sheet, what are they going to do? Are they going to start selling bonds? You want to watch rates go higher? Dump bonds into the market.
Yeah, it's nuts. Yeah. So we'll see what's going to happen next. So what did you wanted to argue about housing, and then we were going to talk about.
We don't have to argue about housing.
Oh no, about interest rates, I think.
Yeah, I think my contention is that even if the Fed drops, let's say the Fed funds right now is 4.25, 4.5, they cut it 100 basis points. Which again, another political move. They cut 50 basis points, surprise cut in September, right before the election. And you put all these things together, and this guy looks like he's overtly political. So we had the 100 basis point cuts and the Fed funds rate. And what happened to long rates? They actually widened out. And you'd expect a term premium, in other words, the spread between, say, cash or T-bills and the 10-year to be somewhere between 100 and 150 basis points historically. So with Fed funds at 4.25, 4.5, the 10-year 4.25, 4.5, if you cut Fed funds by 100 basis points, at least you're still looking at the 10-year roughly being where it should be. Right. And if that's the case, this is where I get into housing. Like, how do you bring that 30-year mortgage down if the 10-year doesn't budge when we bring the short end of the curve down?
Yeah, and I've just I've been talking with Byron about this too, and at LTI, and I don't have a fundamental reason to support my view that rates are going to come down. I just think it's all about the big muscle that's putting pressure on the Fed. Now, as you said, the bond market doesn't work that way, but I actually think that housing is being inhibited by a Fed that refuses to cut rates, and I mostly think about the lower income cohort who can't afford homes at these levels. Now, again, in the 90s, we had high interest rates. a high 10-year, certainly compared to now, and higher than current inflation. But we also didn't have the kind of budget deficit we had now. And you and I were talking about that this morning, that's sucking all the liquidity out of the economy. But we actually pivoted to housing stocks in the last number of weeks and even months, adding to Home Depot, adding the name Sherwin-Williams, adding DR Horton. So we'll see. I mean, DR Horton just had great earnings. The stock popped up and then it was down mysteriously today. I couldn't find any news, but we'll see. I don't know what's going to happen, Arthur. I just don't think Jay Powell has the constitution to be criticized, because he is not a humble man. He has never admitted making a mistake. And remember, he was in charge in 2018 in the first round of Trump 1.0 tariffs. Yep. He raised rates then, and he caused the 2018 bear market, which ended on Christmas Eve. So he's presided over 3 bear markets. 2, I think, were his fault. 1 was not, which was COVID.
But, you look at housing starts are anemic. I mean, I know supply is picking up, and I know it's picking up much more in some areas than others. I think Texas is having a kind of a glut, and it looks like Florida is too. I don't know if you're seeing it there in Scottsdale or me in Nashville, but housing starts still, for the most part, they've been pretty flat to down over the last 5-6 years. Existing home sales have been very anemic too, and part of it is people are stuck in these low mortgages when they refied, right? And they don't want to move. Because
I love what you talked about what Trump had floated, I don't know, yesterday on getting rid of talk about that real quick.
That's interesting. So, I think he's kind of coming to the realization that he's not going to get the Fed to move. He can, in fact, I would say bond markets, even if it's bad policy, people like certainty. Right. It's the transition that people don't like when they don't know exactly what's going. This is why the trade stuff is such a problem. While you're in it, while you're making the sausage, people don't like it. Right. So Trump's come out and said that he's going to possibly work on with Congress exempting capital gains taxes on owner occupied homes. Right now, we've got a pretty high limit where you can exempt part of the capital gains treatment in homes. But he's talking about eliminating it, which would make transactions on houses really attractive. It might unlock all these cap gains.
100% agree. And I will tell you one other thing that is not related to tax policy, but if you're a married couple, and this too, you get a $250,000 exemption each person.
Yeah.
But if you were in the situation I was in, where my husband passed away, and then I went to sell the house, I no longer had his exemption. So I had to pay more in taxes, just like I had to from an income standpoint, because I was now single. And so I think there's a lot of things that they can really do around the edges that will enhance the ability for people to go out, make decisions for the right reasons, which is, this house is too big for me. I don't need to live here anymore. I'm going to downsize, and not worry about what you're paying in taxes because of some quirk in the capital gains nuance in the capital gains. So I think you're right. I think that would be super compelling. I don't know how he gets it done. I don't know if you can pass something like that in a rescission bill, or if they have to, do a whole nother bill, but that'd be cool.
But he's feeling pretty good about passing the Obama bill and a lot of other things. So this guy's got a lot of wins. I think he feels like he's got the wind at his back, even though none of these.
Finish that sentence, because if he just has a lot of wind.
A lot of wind.
Okay.
Bigly massive wind.
So we'll see. Stay tuned. I think there's a lot of good news. We haven't seen any of the benefits from the Obama bill being talked about in terms of the low-end consumer. I will tell you from earnings, the consumer looks like they're in pretty good shape, at least as far as the companies that we've heard from so far. We're going to talk about one that choked today, but so I think the consumer is hanging in there. So I guess we're going to names to watch. Is that right?
Yeah. Oh, no, we're going to talk that, or we're going to talk about earnings.
Yeah, that. Okay, so 4 companies reported today that I think are important to the whole narrative. One was Google, and they came in, they kind of beat across the board. YouTube was up, and YouTube has really given Netflix a run for its money. So that was an important metric. Continues to outperform. Revenue was up 14% year over year. Search revenue was up 12%. YouTube ad revenue up 13%. Cloud, did I mention cloud? Network revenue was up, was flat. And then all the other revenue, that's what they call it, all other revenues, were up 20%. Operating income and margins improved against the street's expectations, but margins actually came in light. But one of the things that really kind of put the stock was up in the after hours, and then it started to trend down, was that they announced that they were going to increase their CapEx budget. So they're going to $85 billion in CapEx spend this year to drive AI spending. And that's, that is also what we saw post DeepSeek. We didn't see any of the hyperscalers stepping away from their budgets. In fact, they either confirmed their budgets or increased them. And Google, I think, has increased twice this year. So the street was expecting 75 billion in 2025. They're coming in at 85. And I think before that it was 70 earlier this year. So that's a name that has been up, I think, 10 of the last 10 days until today. It's probably just a little bit of a relief rally relief sell-off in the aftermarket. We'll see what happens after the call today.
That's great.
Other company that reported was Chipotle. And we talk a lot about how leadership matters. Remember, Chipotle was run by a guy named Brian Niccol, who went to Starbucks, and he's turning Starbucks around, and he had turned Chipotle around, and before that, Taco Bell. But I think it's important to why did we stick with the stock? Because it was all of his handpicked people in charge, but they've disappointed really for a year now. And so we're going to be having a discussion tomorrow about whether or not it belongs in our 12 best ideas portfolio any longer. I think it still has a place in the portfolio, but it's down about 10% in the aftermarket, and it's done nothing for, well, you can see from the chart, for a year. So I think I know what we're going to decide, but we're going to talk about it tomorrow. That's a consumer that isn't showing up, and I think it has to do with menu and just marketing in general, so, and leadership. So we'll see what happens. ServiceNow, the flip side of the leadership coin, Bill McDermott, I've argued, is one of the best CEOs in America. They were delivering 20+% earnings and revenue growth during 2022 bear market, and they've continued to do so. The stock's up pretty handily in the aftermarket. They beat and raise, and this is where good leadership really matters. And then my favorite stock, and everyone's favorite stock to hate, Tesla, came in. They pretty much missed on every single metric except for margins. And so with the calls going on right now, we'll see what happens. It looks like it's selling off some, but according to the chart. But this is a company that is not really in the future going to be valued as an EV company as much as an AI and robotics company. We think robotics is a really important place to be. You mentioned the U.S. becoming a manufacturing powerhouse, and that being an objective of the administration. We still have over 450,000 manufacturing jobs that have gone unfilled. So we need robotics. You and I have talked about this. Yeah. You had some pretty cool pictures about robots that were laying tile and roofing houses. And so I think it's going to be interesting to see what the result is after the call today with Tesla. It's not in our 12 best ideas portfolio. ServiceNow is, and it will stay there. But this is a stock that we own in growth, and we don't have it in 12 best because it's too volatile. Instead, we have Uber, which was left for dead, and we moved it into 12 best, and the stock has really had a renaissance because it's clear that they're not going out of business due to Cybercab and Waymo. So, or robotaxi.
The other thing that I think people may forget, because it's, people's memories are transitory too, Nancy, is that he was distracted for a little bit here until he just recently got back to his company. I mean, the political ramifications of being with the administration and developing the DOGE department and going through and suffering the attacks, both personal and professional. This is not a dumb human being. This is a very smart, very interesting man that clearly continues to have a lot of potential.
Well, and I think I would just say to you, I've talked about it a lot internally, but if you read his biography, this is a guy who routinely, he describes himself as wired for war. And that's who he is. And so he does best when he's under pressure and perceives himself to be under attack. And he also sort of frequently and regularly teeters on the edge of disaster, and then he retreats just in the nick of time. So he's, you know, what he's thinking about, because he just invested $2 billion from SpaceX into XAI, which is the AI, the X and AI company. And so he merged X in there as well, the former Twitter. And then he's going to Tesla shareholders and asking for $2 billion from Tesla to invest in AI. So that's where his mind is focused. He's a guy who, he wanted a motorbike when he was like 12, and his dad was a pretty verbally abusive and individual. And so Elon stood there for over an hour and kept asking for a motorbike while his dad berated him. And guess what happened?
He got a motorbike.
He got a motorbike. So you can talk about him all you want. He's lost the mojo. I've seen him lose the mojo like 3 or 4 times over the last 10 years, and the stock's up 1,800% over the last 10 years.
If you think about like where the growth in business is going to come from, I mean, autonomous cars, robotics, all this stuff, they all feed into each other. So if you develop the AI and get it working properly, I mean, that's what's going to go right into the robots.
Yeah, no, 100%. And he wants the money to buy thousands and thousands. I think might even be hundreds of thousands of NVIDIA chips. And that's, you know, that's why you and I love Grok. It's so fast and it's so accurate. And that was him going to Jensen with Larry Ellison on a different matter and just saying, give us more chips. We want more chips. Can we buy more chips? And they got more chips. And that's, I think, really served them well. So anyway, that's all I have. That's a lot. Sorry.
It's a long show. We have a lot to say. And we're pulling punches here. We could go on for a lot longer.
Well, I think the ominous director would cut us off. So thank you.
Thank you, everybody.
Yeah.
And everybody, remember, watch us on Wednesdays at 5 Eastern. And if you have questions, even from a previous show, send them in. We'd be happy to answer any questions. We're going to try to bring some guests in and mix it up a little bit here too, because you know, we actually we could do all the talking. I don't think you and I have that problem, Nancy. But
we have some already on the calendar, so yeah, we're good. So we can take a break. All right.
Thanks, everybody. See you next week.
Okay.
Bye.